Today, we're looking at just why Canadian cannabis companies are struggling. So, yes, that means we're talking about Aurora. And it sounds like Washington, D.C. is prepping for legal cannabis sales in the very near future. It's Wednesday, May 20th, and this is your TRICHOMES Morning Buzz.
Broadcasting live from the TRICHOMES.com studios in Southern California. It's time for your Morning Buzz. We bring you late-breaking news that keeps you up to date with what's happening in the cannabis industry.
Our first story today is a new report says most Canadian cannabis companies are struggling and outperformed by U.S. cannabis businesses. Why is that? According to Bloomberg, the top U.S. cannabis companies are notably outperforming their struggling Canadian counterparts, yet valuations are still held back by their inability to list on the big American exchanges. Green Thumb Industries, Inc. became the first U.S. cannabis company to generate revenue above $100 million and beat EBITDA expectations for the fifth consecutive quarter. Shares climbed 17% on Friday. I think it's an inflection point where the U.S. market is becoming the dominant market in the global marijuana space, said Mark Noble, Executive Vice President of Strategy at Horizons ETFs Management, Inc., which offers exchange-traded funds that track both the Canadian and U.S. cannabis sectors. I think the only thing that's really keeping these stocks from overtaking the Canadian LPs is the fact they're not listed on the U.S. stock market. While the New York Stock Exchange and the NASDAQ have listed Canadian cannabis companies like Aurora and Canopy Growth Corp., they prohibit any company with operations in the U.S. since the plant is still illegal under federal law. The Toronto Stock Exchange won't list them either, leaving them to smaller options like the Canadian Securities Exchange. This means a smaller investor base and therefore lower valuations on average. While U.S. stocks have been bolstered by most U.S. states' decision to declare cannabis an essential service during lockdowns, Canadian companies have struggled with an already slow retail rollout in major provinces like Ontario, which slowed even further because of the pandemic. Total store count in Canada grew only 1.4% in April, according to Cohen Analysis' Vivian Azer. More clarity on the health of the U.S. cannabis industry will come this week with earnings reports from major players, including Curaleaf Holdings, Inc., Trulieve Cannabis Corp., and Harvest Health and Recreation, Inc.
An example of a major Canadian player currently struggling, Aurora Cannabis furthers its divestment of hemp assets. Hemp Industry Daily reports, Canadian cannabis giant Aurora Cannabis is further divesting itself of some of the hemp assets it began acquiring in 2017 as it tried unsuccessfully to profit from the CBD market. In its latest move, Aurora accepted an offer to sell a large greenhouse in Exeter, Ontario, for about half its $17 million Canadian listing price. The sale was about one-third of the original purchase price for the greenhouse. Last year, Aurora sold its remaining stake in the Green Organic Dutchman, a Toronto company that has a hemp subsidiary in Poland. The sale went for about $86.5 million Canadian. Aurora's hemp business was projected to need more capital investment over the next 18 months, as well as continued absorption of operating losses, investors were told. Last week, Aurora reported a net loss of $137 million Canadian in its third quarter, an improvement over the $1.3 billion Canadian net loss in the previous 3-month period.
D.C. Mayor's budget plan may be a good sign for legal cannabis sales. Marijuana Moment reports the mayor of Washington, D.C. released a budget plan for the 2021 fiscal year on Monday, and it contains a signal that the local government is preparing to implement regulations for retail cannabis sales just as soon as Congress allows it. Mayor Muriel Bowser is proposing to shift regulatory and licensing responsibilities for the city's current medical cannabis program from the Department of Health to the Alcoholic Beverage Regulation Administration. The budget also calls for the establishment of a non-lapsing medical cannabis administration fund to collect all funds received from medical cannabis licensing, permitting, and registration fees, according to a fiscal impact statement. Representative Eleanor Holmes Norton, in particular, has been a vocal critic of the rider, and she said last month that the coronavirus pandemic demonstrated the need to free up retail sales so that the local government can offset economic losses. At this moment of unparalleled need, DC should be able to collect tax revenue from all available sources, like every other jurisdiction, including from recreational marijuana, which is believed to be widely used in the district, she said.
That was today's buzz. Have a response to any of the stories on today's show? Share your comments when you join the conversation with the professionals of the cannabis community at trichomes.com. Our beta is now open, so be sure to sign up. It's free.
And be sure to keep up with us on all social media platforms. And you can also subscribe to our podcast and the Trichomes YouTube channel for daily content. My name is David Fortin.
And my name is Allison Ben-Yehuda. Take care.